Good morning, traders and investors, and a happy Friday to you. Joel is away today, but Triple D and I got a good show for you. And at 8:15 a.m., Louis Sykes from Homie Charts will be joining us for a Crypto Corner segment. We also have just a quick heads up here. Supreme Court is open today. Traders are standing by for a possible tariff ruling. Supreme Court will be starting at 10 a.m. We don't know if they will be discussing tariffs, but we should have it on our radar for today. Also, GDP and PCE at 8:30 a.m. today. We're going to be breaking that news. We're going to talk about what's happening for the weekend trade with some I think it's fair to say a little aggression from the US toward Iran. We'll talk about that and potential implication for war stocks, drone stocks. Applovin with a nice rally overnight, a relief rally. I think it's fair to call that. There was a report circulating on social media. We'll get into that a little bit more. What turns the market around? Something to consider here and tease you a little bit. We're going to save that discussion for a little later in the show. Couple ratings a little bit later and a couple earnings, including a preview for next week. Folks, let's get it going here on Friday's edition of Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, let's take a real quick look around the markets here. Let me pull up my trade station charts. SPY. Whoa. Did SPY just spike there? SPY trading down about 1% here.
No, that's the 8 o'clock, Prince. Welcome to the fun FINRA dump from all night.
Thanks for hopping in here, Triple
One
D.
more time, and before I'll just give that quickly. So what you see
Yeah.
happen at 8 a.m. for new listeners is all the overnight trades from the 8 p.m. to the 4 a.m. session on Interactive Brokers on Robinhood. All of those trades have to hit the tape. For whatever reason, they dump them all on there at 8 a.m. So between 8 and 8:05, you see crazy moves like that. Those are trades that are actually happening. Those are old trades. So just to let you know, we did not just spike on the SPY.
And look at the chart now, back down.
Yes.
All right, cool. Thank you. Thank you for giving us some pause there. SPY trading down about 0.1%. Let's take a look, real quick look at the Qs here. Qs also down about 0.1%. Why don't we take a quick look at the IWM? That's a good indication for small caps. And the Russell trading down about 0.3% here. USO oil had some volatility last night on some commentary coming out of the US, indications toward Iran. While we did see a move lower in oil last night when we heard that rumor, and we might get to it here in just a sec, kind of just drifting around here. Nothing too crazy here in oil this morning. Take a look at GLD and gold trading up about $43, about 1% here this morning. SLV and silver trading up pretty substantially, almost $3, almost 4%. And a real quick look here at the IBIT and Bitcoin. Bitcoin trading just under the 68,000 level, up about 0.5%. These charts, folks, are brought to you by TradeStation. Chart, analyze, customize, all in one platform, born to trade on TradeStation. Thanks to TradeStation for sponsoring the charts for pre-market prep. Triple D, how's your morning going?
It's going okay. It's been one of those overnight sessions where, again, the same story seems to happen. We ramp up overnight. We get into that overnight session. The retail traders get all antsy in their pants and they're buying stocks. And then we start to get to the 4 a.m. regular exchange open and we start to leak as money comes in because there's a lot of traders that don't trade on that overnight session. So we saw SPY really ramp up. Like a lot of people just ignore that session altogether. You can't ignore it altogether because it's tradable. And I mean, there's a lot of trades happening. There's a lot of volume, and it's fairly liquid. So there's a lot of traders there. They're just mostly retail, and they're usually wrong. So
Fair
again,
enough.
buying stocks, chasing them up on Robinhood at midnight may not be the best idea.
We're getting into the weekend here, the weekend trade, Triple D, and we have to consider what's going to be going on around the world. The Olympics have been going on for most of February, and we kind of had the sentiment. I think it was a good call, whoever said it. Is there going to be like geopolitical aggression, tensions around the world while the Olympics are happening? It's a global event. All these
I said
countries,
it.
yeah, you said it.
I
That's
said it.
funny. I think it's a
I
good.
mean,
I
I
think it's
don't
a good
think,
call.
like, and we were saying that, I don't think Trump's going to go and attack Iran when the Olympics are on. The
I
Olympics
think
end
it's a
Sunday.
fair. The
So,
Olympics
and
on
he's now
Sunday.
given 15 days for basically Iran to comply, or he says very bad things will happen. That was
That
what he said
was.
yesterday. That was his words. Very bad things
Yep.
will happen.
And then
So the war trade is fully back on here. And let's just talk about that for a second. It never came off. The war trade has just been ramping up and ramping up and ramping up. LMT from $500 start of the year is now $670 here in the pre-market. You can go through NOC. AVAV and KTOS were beat up because they were in the high multiple contraction stocks, but they're starting to show
totally.
life here again too. So General Dynamics, another one. So obviously, and RTX is another one as well. RTX has been a little bit quieter, but we can definitely see these stocks catching a bit here in the last couple of weeks ahead. So you know what we do over Stock Trader Network and a pre-market prep? We're catalyst traders. We're looking at future catalysts and trying to get ahead of them. Well, if you're going to have, Iran and, obviously geopolitical risk rising, tensions rising in the Middle East, probably a good idea to be long some more stocks. If you've been doing that, you've been making some money.
And that's going to be the case here when you put on the weekend trade in the STN room, probably around
tonight.
3:30 or
So
so.
my weekend
Yeah.
trade is I usually try to get ahead of Catalyst, get ahead of the earnings, which we could probably get into that. We could do a preview of that, but we can all just do that a little bit later. But we've got a nice earnings calendar for you guys as well. Actually, you know what? Why don't we just throw up the earnings calendar? Just do a little bit of preview here right now because we got Louis coming on here. When he gets in the video, he's going to be on early today, 8:15, because we got GDP and PCE at 8:30. We got Louis a little bit earlier today from 8:15 to 8:30. So we're talking some crypto. Brentster's going to go grab our earnings calendar here because there are so many major companies reporting next week. You think you're out of earnings season, and this week was kind of quiet. There wasn't a lot of majors here. Thanks to Michael Feehan for putting this together for us every single week, killing it over there with the graphics. But when you dig in here, there are some big retail names too. So Monday, HIMS, retail darling, KTOS. Tuesday, we get First Solar, Workday, which the bar is really low there, Axon Enterprises, AXON, your taser and your body cams for your police officers, TEM, Tempest AI, if you like that. Cava reports on Tuesday. But Wednesday is the day. Wednesday is the heart. Like we say that we're in the heart of earnings season. Well, this isn't the heart. This is the second heartbeat here. And NVIDIA is going to move the entire market. And everybody's going to be waiting on pins and needles for the NVIDIA report. NVIDIA often does run up ahead of the report, so I wouldn't be surprised if we see some strength maybe in through the weekend and into early next week. But, you get NVIDIA. But not only on Wednesday. You get Snowflake, Circle, Trade Desk, Zoom, C3AI, Urban Outfitters, IONQ, the quantum names all report within 24 hours because on Thursday, you get QUBT and QBTS. We're going to hear what's happening in quantum land. Obviously, we don't expect any earnings. These companies are all pre-revenue. But, is there, what's happening? Is there stuff? Are they working on new milestones? What's going on there? Thursday is huge with CRM, Rocket Labs, XYZ, Intuit, Monster Beverage, Dell Computers. Dell got the bump last night from the Trump bump. Actually, just to go on a tangent,
Trump mentioned.
Night, Dell starts popping off. We're like, what's going on with Dell? It's like, oh, Trump. And Trump says, everybody should go out and buy a Dell. Trump pops $1.50 as he says that, and obviously gives it all back. These Trump bumps just are not holding. But, just going back to the earnings calendar, Celsius, and there's a lot of news here. We're going to get to Celsius in a second. That reports MP Materials, Rocket, RKT, Soundhound, Shack. I mean, CEG. CoreWeave.
Yep.
What day? It's Thursday, CoreWeave?
Yes.
Yeah, CoreWeave.
And actually, the I just want to say the Salesforce is Wednesday evening.
It is?
Yes.
Oh, I have it on Thursday morning.
Yep.
Okay, well, I'll have
Wednesday
to
evening.
adjust that.
Yep. I'm looking at the press release right now. It
okay,
says
perfect.
February
CRM is on. I'm moving it over in my own calendar here right now.
Cool.
So, I mean, lots of earnings, lots of potential catalysts for next week. And then, clouding it all is the potential for the war, trade to continue to, obviously, and geopolitical risk rising. With the end, and then, everything that's just running everything right now is where's AI going? What's the next thing that's going to disrupt this weekend, or what's it going to disrupt next week? Because we're kind of quiet on the disruptions this week. There wasn't a lot of industries that just got hammered. I mean, you can still say, oh, software is still going down. But they didn't come for really anything new. I feel like we're due for AI to come for a new sector here again. So keep that in mind. Disruptions are still happening across the board.
Triple D, for the weekend trade for earnings next week, how far out are you going? Like, what's the limit? Is it a few days? Is it Monday? Is it Tuesday? Is it Wednesday?
Yeah, so, and weekend trade can be a number of things. Like the weekend trade is usually more the earnings stocks for next week. So what you're talking about is a pre-earnings run-up trade. I've specialized in the pre-earnings run-up trade for 15 years. I've done this, pretty much, like what I like to do is all the darlings. I like to do the stocks that are really, have high volume, widely followed, and really get the excitement going. Like Nvidia is like a stock that everybody's going to be talking about.
Yes.
Snowflake, CRM, people will be talking about those too because they've been beat up. And they're going to be like, oh, can they say anything okay? Can they bounce back? Which brings me to another point here too. I mean, software kind of had an okay week here. We've been going down, down, down. I want you to bring your charts back up here, Prince, because I want to show you the IGV. And the IGV in the last 4 or 5 days is in consolidation station. Now, it might be, so if you go out to a 90-day chart, you'll see what I'm talking about here. It might be consolidation to go lower, but it also might be consolidation to, make a bottom. And I mean, we've got, even on that chart, you can see February the 5th, we were bottom 79.27. We've retested that 3, 4, 5 times here, but we're holding. So I would say support is support until it's broken. So if you wanted to take a shot with a lot of software names reporting next week, could we get a relief rally? So I don't think the big bottom's in, but I think we're due for a relief rally here, and I think we've put in some work. So I think it's possible that we could actually see some of the software names bounce. Which brings me to Applovin and our first piece of news of the day. Because Applovin popped huge last night, is leaking back. There is rumors that that OpenAI is doing a deal with them. I don't know if you have the tweet. If you do, you can.
Have the
Jonah
tweet.
Lupton. Hi, Jonah. Great follow here. Still trying to confirm this. When he gets more details, I don't think we have got any confirmation. But OpenAI mentioned today on their capital raise call that they're now starting to work with Applovin on monetizing ChatGPT through ads. So if we get an official press release from Applovin that they got an OpenAI, the stock will pop, and people are anticipating that might be coming. Now, this is still just a rumor. We have no news here. But it popped up. Applovin stock popped 35 points on this rumor last night. It's leaked back because we haven't heard anything more, so it's given back about half those gains, only up 18 here right now. But again, here's another stock. It was $700 to start the year. Got down 2-for-1 stock slip, but it didn't get any more shares. Got down to 359, and now popping up a little bit, and trying to look like the IGV, trying to put in the double bottom, trying to do some work, trying to hold on. So from a technical perspective, Applovin looks like it's trying to do some work down here to try to claw its way back. Is it over for Applovin? Is this the bottom? I think software is still very sketchy because you don't know what's coming next from AI. But in the short run here, you can trade anything. You can hate a stock, and I've said this before. You can absolutely say, I believe this stock is going bankrupt. I hate it. You can still trade it from the long side. There's little trades in there all the time. Stocks don't go straight to zero. Not saying Applovin's going to go to zero at all. We don't know which software companies are going to potentially be disrupted. We don't know if Applovin's going to even be disrupted at all. But right now, we've priced a lot of disruption. The stock is massively oversold. It's putting in some work. And if we get a headline with them on OpenAI, you can see the stock at 460 or 470 in a hurry.
And when we have moments like this, when we have sectors that are so beaten down, like any glimmer of silver lining from any company can charge the entire space, right?
For sure.
Yeah, like they're looking for, like grasping at straws for anything.
Yes.
So you had a thought last night, like, okay, like, am I going to play this Applovin up, whatever it was up $30 or whatever. I don't know if that's a chasing kind of play, but is there another way to play the sentiment in the space?
Well, yeah, there's always ways to play everything. I mean, IGV just encompasses all these stocks. So you can look, and I look at this chart and I think, hey, it's trying to find support. Sometimes when you're in consolidation station, you've had a big down move and then you consolidate for a bit. Sometimes it's consolidation to go lower, and that could happen as well. But either way, when you get consolidation, That's the trading opportunity. Like, place your bets. The train is at the station here right now, not moving up, not moving down. Place your bets. And, if we break down, then it looks like she's going down. If we break up, then it looks like she's going up. We can get an undercut and rally. You see that sometimes. Sometimes that's a good formation too. So if they do break down, if you're playing it short, you need it to stay down below that key level of, old support. But this is, place your bets time here on software, because if it's going to bounce, it's going to be right now. If, it's a big if.
If. I like it. We ripped through that news item here. I think that was some pretty darn good coverage for a short amount of time covering it. We do have Louis Sykes in the background. Let's go to Louis for the Crypto Corner segment. Here we go.
Morning, guys. How's it going?
Good morning. It's going well. How you doing, Louis?
It's fantastic. Lovely to be joining you. 2 in the morning here in New Zealand from the other side of the world.
That don't bother you, though, because you trade all night. You're like young guy there. You're trading these crypto markets 24 hours a day, 7 days a week. Louis never sleeps, so he doesn't look tired at all.
Yeah. Yeah, exactly. I've literally got, as we're talking right now, everybody's talking about software and artificial intelligence. I've actually got an AI bot that I've just started developing, like an automatic trading bot for meme coins. Like, I'm trading these meme coins that are like at a $100,000 market cap. I'll trade anything. I'll touch anything.
What are you using to develop that AI software? Are you using like
I'm using Claude Code. So it's actually just been a nice little project. I've just got I funded a little account, a few $100s. I'm just going to see what happens. But you got to play with the toys.
Let's talk about Claude for a second here, because I love this. We've had this conversation, obviously there's Clawbot, Claude, there's a lot of these, talk to us, like, how did you start? Like, how did you go out and, what is your process for going out and getting involved with Claude? You go out and like buy like a Mac Mini or something, a special computer for it. You just put it on your regular computer. Talk about the process of like setting this up, because this is cool.
Yeah, I just got the Claude Max plan. Spent $200 on the Max plan. Installed Claude Code, so you don't work through the chatbot online, but instead you work through PowerShell on your computer. And so it's this blue screen, and I look like this coder. I've never touched a line of code in my life. I have no idea what I'm looking at, but I talk to it like I talk to it normally. Sure. It's just that the interface is obviously a little bit different, and just walking through code and saying, hey, this is what I want to do. I don't really know what I'm doing, but then it meets you where you are, and so you can have the ability to develop anything. And so even a dummy like me, I've managed to develop something where every single morning it summarizes everything in my news flow, and I get a personalized email every single morning at my desk with all the key headlines, all the emails that I need to answer, and all the things that I need to do that day. I've developed this automatic trading bot, so I can just go out and just press buy on Telegram, and it just surfaces the setups that I want to be buying. And so, I'm a dummy when it comes to this stuff, but I've managed to get it working. And so, again, I think it's just playing with the toys, getting a little bit of experience. I think that's a really valuable thing to do.
This is unbelievable that a programmer can come in, use a tool, and without having any programmers at all, create an algorithmic trading software. I mean, this is crazy to think that this is possible. And right away, Smoke Tuna is exactly right. The new programming language that everybody is using is English. Yeah. I mean, this is crazy that we've come,
it's conversation.
To this. Yeah, like basically, and I was reading stuff too, like code. Like obviously, programming code was written so that computers can talk and communicate with humans. But now computers speak human. So, I mean, all of a sudden, does this just mean all the programmers are out of jobs here? Or are they going to be like, elevating? Hopefully some of the programmers will learn to work with AI maybe, and those jobs will stay. Right. But, some people are saying, oh, no, this is like the new thing. We don't need programming anymore. I mean, your case in point here, you're not a programmer, but you just created algorithmic software without a programming degree. This is incredible.
I have a question for you. I come onto your show and, you're always asking me questions. I've always got charts for you. I've got no shortage of charts. So I'm going to ask you a question now. I got to ask you a question. I'm really curious about this. I think this selling in software is overdone. You said now is the time to get positioned. I feel like now we're going to get a really nasty bounce in a lot of these software names. I think it's really overdone. But the question I want to ask you is, for the last 10 years, every time there's been a falling knife in software, people just go out and blindly buy that dip.
Yeah.
And they just buy. But is this the first time ever in this space where this moat that software has is finally being disrupted? So people going out and just buying that falling knife in software, is this going to work out differently to all those other times?
Nobody has the answer for that question. Nobody has the answer for that question because we don't know where AI is going. Like, I'm of the opinion, and I tweeted it last night, that AI is eventually going to disrupt all businesses. I think right now it's picking on software, it's picking on the low-hanging fruit, like the obvious stuff. But I think eventually we have AI disruption across the board. And I don't know where, what the timeline is for this, but I believe there's going to be massive job losses coming in the next 2 to 5 years, like across industries that, like, once physical AI starts coming, and you can see what Unitree is doing over in China here right now. I mean, if anybody watched some of the videos and people say, well, it's not real. Well, you can go verify some of it is actually real. I mean, once physical AI starts coming in, the job disruptions just go off the board. It was a CNBC commercial I saw the other day. And he's talking about, it's a local, because you get local ads too sometimes. So it's a local ad. And he's talking about its plumbing business. And they're like, AI can't fix your sink. AI can't come into your house and do all these things. And I'm thinking to him, not yet.
Well, what about when there's AI in a humanoid, right?
That's what we're saying. Physical AI. That's what it is. Once AI is in a humanoid and they actually have the brain capacity better than a human, all bets are off. It's disruptions across the board. So we can look at software and say, back to your original question, yeah, we could bounce here. It's oversold. I think we're due for, it's never that easy. Like, when, people are coming in here and I'm shorting all these software stocks to zero because these are all junk. It's never easy. And from trading, Louis, it's never that easy. There's always vicious shakeouts. I think eventually we're going to have a rip your face off rally. We started seeing the Applovin last night a little bit, just on a potential OpenAI headline. So I think, I don't know if the long-term path for software is good. If you're 5 to 10 years, I'm not sure I want to be a long-term investor, but it's trades. You can trade anything, and maybe you got a tradable bottom here in IGV.
Do you think, Dennis, that software has been disrupted in this way before? That was also another question.
I don't think so.
I don't think so either. Yeah.
I don't think so. I think this is the biggest disruption software has ever seen. But I want to take it back to crypto here because we want to bring Louis' charts up here. We got him for another 7 minutes here. Put Louis' charts on the board here, and we'll talk about, so you're talking about trading these 100,000 market cap meme coins here. like what? Like, name a couple of these just for fun. Not that I'm coming in and going to piss in your pool here or anything, Louis.
Mate, I don't even know the names of the tickers of the things I buy. They're all junk. They're all going to zero, but I just want to trade a nice little pop. And this whole conversation about software, let me just bring in crypto into the fold. People had all of these theories about Bitcoin, that it's this store of value, and the funny theory that everybody was throwing around when it was trading at all-time highs was it was this debasement hedge. That was just a load of nonsense. It's not a store of value. It's not this digital gold. It's just more software. All of these cryptos are just more software. Pull up the chart of that correlation with Bitcoin and the IGV. These things trade tick for tick, and stop trying to tell the story of what it's not.
Wow, that's such a bold statement, because when we've been seeing, why won't Bitcoin rally? Why does Bitcoin keep going down here? And when you're calling Bitcoin software, which is exactly what it is, it makes perfect sense that we've now linked up with the IGV. And maybe if we get software stocks bouncing, maybe Bitcoin can bounce a little bit here too. But the disruption here apparently is coming for crypto as well, you're saying that.
And I think the areas of weakness in this entire AI correction in software hasn't necessarily been software. It's been in abundance. Because if you have a look at the other end, you've got scarcity, you've got precious metals, you've got energy, cyclicals, emerging markets, materials, industrials. These aren't infinitely scalable like software, yet they've held up the most. But the areas of abundance, you can create an infinite amount of software. It's infinitely scalable. That has been disrupted. And then in crypto land, you've got all of these blockchains that nobody uses, all of these cryptocurrencies that are worthless. 99% of this market is absolute crap that we don't actually need. That is just abundance that is just being priced out. The market has finally caught on to the fact that we don't actually need all of this technology. We don't need all this block space. Wow. We don't need all of these blockchains that nobody uses that basically do the same thing. And so I think there's an opportunity where there is genuine technological solutions that are driving real returns in the crypto space, that are making money. There are a few networks that really stand out, but they're being thrown out with all the other trash. And so, people just lump crypto just in this one word. They lump all these cryptocurrencies together, but in doing so, they miss a lot of nuance, because there is most of the space that is absolute crap, but then a very small handful that are actually making real money. And so that's what I want to be focusing on, is that small 1%.
Let's look at that 1%. What do you have for us? I know you've talked like Canton network, that you've talked before, but what else, you can talk that again if you want. Just talk to us about that 1%.
I've actually gone through, where's the chart? I've gone through and I've literally read the white papers and developer notes of 500 cryptocurrencies over the last 6 months. It has been a lot of work, Dennis. And I've created my own custom ranking system based on its technology, its adoption, its value capture, its technicals, its valuation. Most of these things are dead. Nobody uses them.
Look at the poor. He's got everything classified.
75% of the market is just poor. And so as poor in my custom ranking system, nobody uses it. There's some that are okay, a smaller amount that are good, but a very small amount that actually stand out. And so again, that's a really big opportunity. And there's a lot of opportunity in crypto, but only if you know how to navigate it, because there is just so many turds. And trying to look for these diamonds.
The technical term for them.
Totally. It's a good way to describe it.
So what's in the excellent category? Like you got it looks like 1%, like you were talking about there. What's in there?
I'll talk about Canton. I've talked about Canton on the show before, but that's a really good example. I mean, these guys are moving $8 trillion a month on behalf of financial institutions. Nobody in the crypto space is even talking about it because it's not sexy. And in addition to that, this network has actually generated more revenue in 3 days than Ethereum and Solana do combined in an entire month. And so it's only trading at about a $6 or $7 billion market cap, but yet it's generating more revenue combined in 3 days than two networks valued at about $200 billion in an entire month. But nobody is talking about it. There's a new corporate treasury in the stock market, ticker symbol CNTN, that now tracks Canton. So I'm paying close attention to that.
I actually saw the headline, and after you were on the show, I pitched it in Stock Trader Network. I'm like, Louis Sykes, who knows way more about crypto than I do, loves his Canton network. And now we actually have a stock that's tracking Canton. And again, maybe the devil's in the details on this one, but I'm like, you know what? Instead of going and trying to find a way to go buy Canton, you can actually get some exposure here through CNTN. Now, do you know anything about this specifically? Like, does it track it closely, or is this just, like it's a treasury security for it? Like, is this a decent way to play it, or are you better to probably go buy the actual network? Thoughts here?
I've gone out and bought the original network. You know what my opinion is of these corporate treasuries. It should track it loosely, but you're always going to get better exposure just buying the actual thing. Why buy Microsoft when you can just buy Bitcoin, right? That's the old dilemma.
Yep. Full disclosure, I did buy a speculative play in CNTN just for fun here. So I said, you're buying anything like this, expect you could lose all your money, but I'm like, this could also be one that could go off. So CNTN, so that's just full disclosure. I do have a position in that. What else? Okay, so Canton you love. You've talked about that before. Is there anything else hiding in Louis Sykes's book of stuff here where We can jump in.
I'll stick with Canton. That's a really, really high conviction name for me. I'm focused on that one. I think that one is just really underappreciated by the crypto investing community.
Okay, Louis, we got to go because we got GDP PCE coming up here. But once again, we want to thank you for getting up at 2 a.m. in the morning here, coming on. You always kill it. Your research is awesome. We love you, Louis. Thanks so much for taking the time to speak with us today.
Thanks, guys.
All right, thanks, Louis.
Thanks, Louis.
All right, Triple D, I'm going to pull up my charts here. Where'd they go? And we got PCE and GDP in just a few seconds here. Pulling up the SPY.
We'll see what happens here.
All right,
I don't expect a huge move off of this.
Yeah.
Like, I don't expect it to be crazy unless it's really like an outlier. So I think you could get an initial move. Here we go.
Here we go. This is the preliminary reading for Q4 GDP. It is sharply worse than expected. 1.4% growth for preliminary reading for Q4 GDP. Economists were at a 2.8% expected growth rate. For PCE, we have core PCE prices up 2.7%. That was versus a 2.6% economist estimate. So the PCE prices, inflation looking in line here, but the growth for the U.S. economy, the first reading for the fourth quarter was sharply lower than expected, 1.4% growth versus a 2.8% estimate. We are going to be getting 2 more readings here for the fourth quarter. We always get a preliminary reading, a second reading, and a final reading. These numbers are usually revised, so keep that in mind here. But this is initially pretty darn weak. How did the market react?
PCE in line, so if it cares about that, that's kind of a nothing burger here. But the GDP light here, market has reacted to the downside. We've lost about 8 handles here now. I think there's underneath demand here, though. So I'm not overly concerned that we're going to roll over and die on GDP. I don't think the market cares about it enough. The market cares more about where we're going, not what we've done here. So I think any sell-off here could be short-lived. So I'm actually looking to buy this dip.
Okay. All right, Triple D. We talked Applovin. I think we were good on the Applovin discussion. Let's get into your thesis here on Apple. You said something intriguing this morning, and we're kind of talking about like what the sentiment that sort of is in the market when we start feeling a little bit more optimistic. And you were like, you know what? I think it's Apple.
I do. So again, we're going into a world that's going to be very dependent on hardware. And there's going to be a lot of people. If you're trying to go out and buy a Mac Mini right now, you can't get them.
Can't.
So it's really hard to find them. And why is that?
And why? Yes.
Well, 2 reasons. One, we've got a RAM shortage, a memory shortage here. So maybe they're not able to put them out as fast as they were in the past. But the second thing is
Louis, right? Louis, not exactly his
Well, he
use
didn't
case,
do it this way, but if you're going to get an open claw or anything like that, people are suggesting go buy a Mac Mini,
put
it on
agent
that.
on there. Yep.
Yeah,
and
if you don't know what open claw is, basically, what you have is like ChatGPT. Let's just do a quick explanation here.
Yes.
So you have ChatGPT, Gemini, or like chatbots. You go ask them questions. You can go detailed with them. They're like your buddy on the screen. What an open claw or Claude does is like an open claw. It gets into actually controlling your computer. It does jobs for you. It's not only chatting with you. You can actually have it do things for you. Like
email me,
doing AI trading for him, like going over there and actually trading in these crypto markets. So what they have is what's called agents, and these agents can do things for you. So like you can make an agent inside your, and again, I'm not going to say this perfectly. People are going to say, "Oh, Dennis, you're bastardizing this." Of course I am, because I'm not a programmer. But I'm just trying to like simplify it. So basically, the difference between Gemini, Chat, GPT, and Claude or OpenClaw is that these actually are assistants that are actually doing jobs for you. Get OpenClaw, it can like look in your email, respond to emails, do things, whatever permissions
summarize
you get
emails.
It can do stuff for you.
Yep.
And it can create the code to do the stuff for you. So you don't have to say like code it up to respond to my email. You just say, hey, can you go into my email, look through it all, and respond to, get rid of the spam and respond to the important ones and do it in a very professional manner. It can do that. This is crazy. Like it can do that. So that's the difference, is like that's where we're heading for, is actually these are now like personal secretaries, like personal assistants here. And what are they going to be able to do in the future? That's up to the imagination. We're going to be able to do so many awesome things in the future. So just keep all that in mind when you're looking at, everything here in disruption. I mean, there is so many things that are going to happen. But in order for all that to happen, it still requires hardware. So maybe software gets disrupted, but at this point in time, they're not making chips, that themselves AI. It will eventually probably do that too, and probably eventually hardware gets disrupted too. But at this moment in time, hardware is in demand. Like people are going out and buying Mac Minis to put their, open claw on this and trying to get as much RAM in them as possible so they can have an assistant sitting on their desk doing all their work for it, preparing, they can prepare like podcasts for you, even, for example, like we always, the possibilities are endless.
Yeah. And it's funny thinking about a Mac Mini as kind of like a home for your AI agent, right? Or like its apartment.
That's a great way to put it.
Right.
And the reason you don't want to put OpenClaw on your main computer here, at least yet, and the people who I've watched videos of don't recommend it, is because then you're giving it access to all your personal information. So you go give it its own dedicated computer and give it what you want to give it. Don't just let it go into your main computer here with everything on it, and now it has access to everything because say you say the wrong thing or you do the wrong thing, or maybe there's a virus that comes into your OpenClaw and now all of a sudden bad actors can hack and get all your information and get everything from you. So that's, the thing. But what I do think is going to happen for Apple is I think there's going to be continued demand for Mac Minis. There's going to be continued demand for hardware. Apple is a hardware company, folks. And I think it's underappreciated here right now, just kind of going down with the overall market. I know the valuation is extreme, but I mean, we're going into a period of time where hardware is going to be continued to be in demand. We've seen what's happened with memory. We've seen what's happened, even like a GLW, the glass that goes in. We've seen so many pops here. Apple's not participating at this at all because Apple's still viewed as a staple right now. But if it starts being viewed as a hardware company again, Apple could make new all-time highs, and I think it will.
Dennis, I think Apple is going to check off two of your new longer term investment buckets. I think phones nowadays are necessities for better or for worse. It's also hardware.
It's hardware. And I think that's where you've got to be thinking, going back to my three buckets. Energy first. Energy doesn't seem to be going to get disrupted anytime soon. Hardware, not getting disrupted anytime soon. And then I went to necessities, but again, I think I'm early on that trade. I think I'm early because we haven't seen any job losses yet. So I'm thinking like when people start worrying about their job, I think that discretionary spending starts to come down. It's why I've been saying in the STN, I sold my Rivian. Why did I sell my Rivian? Not that I don't think it's a great company. It's that if you're starting to worry about your job, your white collar, you're sitting out here making $200,000 a year, and you're like, I don't know if I'm going to have my job next year, you're probably not going out buying a Rivian today. You're probably going to be a little bit more conservative. So even the fear of losing your job will start to curtail excessive, like luxurious spending. And Rivian, unfortunately, is a more luxurious car. I mean, they're over $100,000. So I think like that is kind of in the eye of the storm. I sold it on the earnings pop. That was obviously a good call because the stock has come down and filled the entire earnings gap here. So I'm starting to think like I don't want like luxurious things. I don't want to be investing in like stuff that I think, like even Ferrari could be another one, we could think about. Obviously that's over in Europe. But I mean, people going out, maybe Ferrari is a different one though, because the ultra rich are buying that. It's not like you have the middle class like could trade up to get a Rivian. The middle class never going buying a Ferrari. So maybe that's just thinking out loud. That's probably not one that's going to be disrupted as quickly because the ultra rich are still ultra rich.
This is good. You're drawing a line though. You're setting some limits to where we can think. Do you remember the user? I forget who it was in the STN chat yesterday. Triple D. How they said it? Aspirational overspending. Do you remember?
Yeah,
Whoever said that?
Because that was a great way to put it.
Great way to put it. Like aspirational spending, aspirational overspending, like a Rivian, like 100. The way I said it.
Yeah.
And you
Like
can
what you
buy a
have.
house for the same as a Rivian or a Lucid. Are people going to be, spending on that when there's concerns about their job in a year or maybe even sooner?
I mean, use Meta as an example. And we went and did research on Gemini, and I'm trying to remember the numbers, so I may not get it perfectly here. But I believe when I researched this last week, and I said it on the show, I'm going from my memory, Meta has 40,000 software engineers. 40,000. Okay. Well, the average software engineer at Meta makes almost $300,000 a year. I mean, all those people are in jobs where they can go out and buy Rivians, they can do some fancy cars, and do some fancy things. Meta has already said flattening the workforce.
Flattening.
Zuck
We're
is
gonna hear
heartless.
that. We're gonna
He's
hear
heartless.
that phrase so much more.
Flattening.
Flattening.
You're going to hear this. Flattening the workforce.
Yep.
What does that mean? It means he's getting rid of some of these software engineers. He's not getting rid of all of them, but he's going to get rid of some of them. If he gets rid of 10% of them, now all of a sudden you have 4,000 software engineer jobs that are looking for jobs. They're programmers. So there's not a huge demand when you got Louis over here, being able to program without a programmer. Computers speak English now, so there's not a huge demand for that anyways. So now they're looking for jobs, and they make $300,000 a year. None of these people are buying Rivians. So, I mean, this is like the fallout from it. Now, this doesn't happen today. It doesn't happen tomorrow. None of these people have lost their jobs yet. But Meta said it in the earnings release, flattening the workforce. They're going to do it. Amazon has already talked about cutting some jobs. Think about robotics. And that's the other thing to think about is some of these companies are going to become much more efficient. Some of these companies are going to get better, the margins. Like we looked at Walmart, and I made this argument. I don't know if I made it here on STN. But when you look at Walmart, you can say, well, it's trading 40 times earnings. Doesn't make any sense. You know what the Walmart overall profit margin is? Like their net profit margin? It's 2.7%. If they increase that to 5%, they make twice as much money.
Wow.
Think about that. So if they could go from 2.5 to 5 in efficiencies, Walmart makes twice as much money all of a sudden. And all of a sudden their PE from 40 is now 20. Walmart could have an efficiency trade.
And that margin improvement, 2.5%, doubling their margins. I don't know, but it doesn't sound that crazy. It's not like you're like, oh,
doesn't
no,
sound
no
impossible. We're not trying to take it from 2 to 20.
No.
And again, cost of goods sold, I believe when I looked at that, were like, the significant portion. Like it's like 70%.
Sure.
Because they're only marking up so much. So you never can get into that. But there's other efficiencies there. There's operating efficiencies. There's stuff there, folks. So when you think Walmart's sitting up here at 40 times, if you get AI efficiency, Walmart could actually benefit tremendously from AI efficiency. And their end products are not going to be disrupted because they sell necessities. This is what I'm talking about, the necessity trade. If you're selling something that isn't going to get disrupted and you can produce it cheaper, now your margins increase and now you make more money.
You might have just talked me into an idea here. This is sounding very intriguing.
Red Bull's mad because I didn't make this argument 2 years ago. Nobody even knew any of this 2 years ago. We didn't even know where AI. Nobody was even talking AI 2 years ago. I know that's a joke.
You got to be proactive.
Exactly. I wish I could go back 2 years. I wish I had a time machine. We could go into a time machine, go back 2 years, and say, "Hey, Dennis, in the past here, in the future, AI is going to disrupt a whole pile of industries. Go buy some Walmart stock." Yeah.
All right. Let's.
Great conversation.
Great conversation, and also great conversation with Louis. Just wanted to say it. Kind of, bummed that we had to sort of end the conversation with Louis because that was a great conversation. Can't wait till we have another combo with Louis in that way.
He's awesome.
Let's do Celsius here. Triple D CELH. You heard something last night. They were talking their deal with Pepsi, correct?
Yeah, so they had an investor presentation last night, which I did not know about, but they were presenting at 5 o'clock last night. And in that presentation, they highlighted that they're doing really well, and they talked about their deal with Pepsi, which I believe we already knew they had a deal with Pepsi. But they were highlighting it and how well it was all going. I think we kind of already knew this.
We knew back at the end of August, Celsius and PepsiCo strengthen long-term strategic partnership. When a company says that phrase strengthen, it means that they already had a partnership. So let me see. Actually, we knew about this partnership. They've had this partnership since 2022, Triple D.
Wow. Okay, so we've had this partnership for a long time, so it's not new news. But the algos are just crazy, and the algos definitely don't have trading perfected yet. So if you're worried about your trading job, we're a long ways away from AI replacing us all here. A long ways in this world might be 1 year, though. So we'll take that with a grain of salt, that comment here. But Celsius pops up from 44 to 50. On news, we kind of already knew. But they popped it last night. I know a couple traders in their chat took the short. Congratulations. Fantastic job. They got to 50, which was just ridiculously overdone. It's back at 47 now, pulling back. It does report earnings next week, so that can be a catalyst for the stock here as well. It is a company that's, are we going to get disrupted by AI here? Can they have AI efficiencies? I think so. But it's also a company that trades with, a higher valuation than its peers. So we have to consider that as well, because this sell-off hasn't just been about AI, it's been about multiple contractions. Celsius has experienced some of that as well.
I mean, anything with distribution, right? Anything with logistics is gonna find efficiencies from AI. Not a hot take, right? I mean, this
Not
is
a hot take,
yeah.
but
So
important take, an important take to say the
sure.
least.
You want to do one of
Let's
our
just talk the markets for a bit. We've
yeah.
continued to roll over here to a certain extent. Obviously, overhead supply still rules the day. They don't like the GDP number here. I still think, like IGV, I'm going to go back to what I originally said. It's down here. We're pulling back, but you got support down here. And I'm curious if we don't have a relief rally here at some point in time. So not on the S&Ps maybe, because the S&Ps just seem to like balance themselves out. When they start buying some stocks, they start selling the others. But we saw some of this leaders to laggards trade in the last couple of days. We've seen stocks like Applovin, even before the headline or the rumor. Shopify had a really good day the last couple of days here. We're starting to see some life here. So just think about that when you're like, we're not talking long-term, we're talking short-term trading. Take the long-term cap off, DDD, short-term cap comes on. I think those stocks are all oversold. I think some stocks are overbought. You're seeing the staples peel back a little bit. I think there's going to be a buying opportunity in your long-term account for some of the staples. But in the short term here, this market is starting to like rotate here again. We saw it yesterday and a little bit the day before. So we've had 2 days where some of the beaten up names are starting to show a little bit of life. Maybe not Microsoft, but CRM hasn't gone down for 5 days here. That's something. ServiceNow is trying to perk up. We know Bill McDermott has said he is going to buy stock next week on February 27th. He said it's the first day he can do it. So, I mean, that stock's holding up a little bit here too. So when we're just flying through these charts and looking at names, I mean, the software names have been beaten up so badly that I still feel there's a relief pop here coming. So even though we got GDP to derail the market a little bit here, I think I'm actually interested in software names on dips. Now, again, as a trade, you always think risk, then reward. If IGV is to take out the low of the move, that's probably, your sign that, okay, this bounce is going to work. But you can put on any trade. Here, you could buy IGV this morning at 81.40, 81.33 here right now. You could stop yourself out at the low if you want to do that. Maybe you want to give it a little bit for the undercut and rally, 79.27. You're risking a couple bucks. I could do that. I can risk a couple bucks and maybe you get that relief pop. And if you don't see, where it's looking like it, then you back off.
Let's hit a couple earnings here, Triple D, or at least one. Let's do one of our, I don't know if it's a big one, but it was one that a lot of people were watching last night. Opendoor company reporting a loss of 7 cents per share. That was a beat versus a 10-cent loss. Sales were really strong. Sales over 730 million. Analysts were all the way down around 600 million. Unsure of what the discrepancy was there. The company did give some guidance on its call. I believe it was on its call. They're expecting Q1 sales around 660 million. We don't have a clean comparison there, but just going off of the quarter, if for Q4, the one that they just reported, they reported over 700 million in sales, and for next quarter, they're back under 700 million. Not always something that the market likes to see, but despite maybe a little bit of soft guidance, shares trading up a good 70 cents or so here this morning.
Love you, Eric Jackson. You've come on our show. You're always very professional here. The stock is in trouble, man. And it's like, again, is this like the disruption? This is like just in the eye of the storm. It's a retail darling that's loved by the retail community. They're holding no matter what. But I mean, we've just come down so far. I feel like the story is broken here now. And I don't know what reignites it. It's nice to get a good earnings report. But when you have a stock that's been in a relentless downtrend for the last 3 months, and you get a 15% pop, it's usually more of a selling opportunity than a buying opportunity. So I'm going to say I'd be more selling the rip than buying this rip.
Any other earnings this morning that you especially had on your radar?
Well, nothing this morning. I mean, we could, we had PPL, who cares? Western Union, who cares? Last night, I mean, there was a couple other ones that are interesting. Akamai, was beat up here a little bit. It's down $8. We had that Live Nation, which was halted ahead of the report, and then it actually popped up. So there's been a few earnings reports here. We could dive into a couple of these. Dropbox is another one that's really tough. I mean, there's so much overhead supply on some of these names, like Dropbox, for instance. Bring this one up again. It's not even about the bar at this point in time. It's about what you are. So write this down. It's not about the bar. It's about what you are. If you're a software company and you're picking up, I made that rhyme on the, maybe I should be a poet, but poets are out of business. So When this stock pops $1 last night on its report, it was almost like there's no way it holds up. I mean, this is just getting disrupted. This business is being massively disrupted. It's obvious guy trades. There's overhead supply everywhere. I mean, even if they blow it away, we've seen some software companies say some really good stuff. Shopify was fantastic report, and they sell it off anyways. So I mean, Dropbox is just not the place to be. But when you get these relief pops, if you've been stuck in these, some of these software names, and they get these pops to lift you out, and you get an instant 10% because of a big pop, and this one might popped, I think, a buck last night, so it was a little bit less than that 5%. You got to use those opportunities to get out. Like, clean your portfolios. If you don't like the industries, they don't fall in your categories. When they get the rips, use those rips to lighten those up, and use the dips to get into the stuff that you want to get into.
And, kind of to your point, the guidance was strong for Dropbox. They reported a slight beat for the quarter, 68 cents versus 67 cents. Sales were also fine. The Q1 guidance, they said they're expecting Q1 sales 618 to 621 million. Analysts down around 610 million. So, this was even a decent report from a name like Dropbox, and still just not able to hold any of the gains.
Stocks you're looking for.
Yeah.
Again, go back. It's not hardware, not energy.
The buckets.
It's not necessities, and it's actually software. It's in the bad bucket. So good bucket, bad bucket. Now, again, we can trade anything. Like I said, software is in the bad bucket long term, but short term it's oversold, and I think you could play it for a relief rally, but nothing more than that. I don't think a lot of these software names are coming back to all-time highs anytime soon.
You want to do a few ratings, Triple D?
Yeah, let's do it.
All right. Rating the ratings is brought to you by The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis and unique KPI charts for deeper insights. Scan the QR code in the bottom right corner. You can get over to thefly.com, learn more about their news and research platform that Triple D and I have been using for quite some time. A first rating, Triple D, where shall we start?
Let's go over to. I didn't write them down here, Brad.
I got BorgWarner downgraded to sell at UBS. Want to start there?
Yeah, and we've saw the auto parts makers really blasting off. Value stock rally has happened. Like I've been saying, I believe there's a bubble in some of these value stocks. I think they've went up too much here now. I mean, but BorgWarner is a company that could definitely benefit from AI efficiency. So you think about that too.
I got a little.
What are the earnings? Or no, sorry, this was a rating. So this was a rating.
Yeah. So
I don't mind the sell rating here, but I wish we did it last week. I mean, the stock just went from 70 to 60. I feel like they're 5 days too late, so I'm gonna give them like a C.
Well, so let me give you the color, and maybe you change your rating. I don't know. Maybe the color convinces you a little bit. According to UBS, the shares are now pricing in an optimistic case for BorgWarner's new data center power generation opportunity. UBS believes the bull case assumes fully scaled 1.5 billion in sales by 2030. However, it expects a slower ramp to half that level. Change your rating at all here in the color? Nah. Yeah.
Nah, I actually think if it got down to 55, I'd actually be a buyer. So I know they're coming in the sell here. I think it's a value stock. I think it's kind of stock that I would buy on dips. So I think there is efficiencies to be had here too. So I think 50 to 55, I think you're in a buy zone down there. So we're not quite there, but if it comes a little bit lower, I'd buy it. I think you're too late to sell it.
All right, next one, we get an upgrade to buy on Deckers by Argus Research. Argus, it's not like the most exciting firm or anything, but let me pull up the chart here and I'll get you some color. Deckers, Triple D, is that a name you've been considering in any way over the last few months?
Not a name that's going to jump into my long-term portfolio, but I see the chart here at 16 times earnings here is not crazy, so it is a value name. I mean, they sell real stuff. Like you go into a store, they're selling physical goods, and like they could have efficiencies that could help them. And I do see it on the charts, and it looks like if it gets above 120, it's in breakout mode. So I kind of like this upgrade. I'm giving it an A. I think it's the right time for it. Deckers has been really beat up since obviously COVID back in the day in 2021 when nobody was going to go outside anymore. Actually, it was recent. Actually, I didn't even realize It got the recent run up to like 2025, got up to $223. So I actually think this is the time now. I actually like Deckers. I'd buy it. Just my opinion.
Ooh. Little color here. Can you guys see it? Yeah, we are peeking into the Fly's platform here, thefly.com. Little color here from the Argus analyst John Stasik, upgrading from hold to buy. The firm cites the management having raised guidance along with its more, quote, reliable forecasting. Argus further notes the company's big brands, UGG and Hoka, continue to report consistent and strong sales growth. All right.
Okay, so that's the ratings here. Let's just go. We have 5 minutes left here. I just want to close, like, with, again, earnings preview for next week. I want to go back to that because we really
Cool.
went through it fast, and I want to just do it one more time. So bring up that earnings calendar here, and just stocks of focus for next week. Like, everybody's going to be talking about Nvidia because that's going to be the stock that moves the entire market. But there's a lot of names here that are like, okay, what are they saying? And there's going to be opportunities because you get like a Workday, for instance, going to report Tuesday night. They might say business is strong, we're doing well. There's a low bar into these, so I wouldn't be surprised if they actually get the relief pop even ahead or even during the call. It's a matter of what happens after that. And I think the same thing with Dropbox. I think these are in the no-no camp, and I think rallies are going to be sold. So if I was trading these next week, my approach would be, one, figure out the expected move on all these software names. And then maybe you're looking at it. I know TG was in the chat talking about this, shorting these stocks up near their expected moves. Because, and again, we don't advocate always to short, as to, if you're a long-term investor, I mean, buy good companies, reasonable valuations. But if you're traders, you absolutely need to buy stocks and short stocks. I think there is the opportunity. If any of these stocks rip, say 10, 12, 15% on earnings, I think this opportunity is going to be met with more happy sellers just because the stock's in such relentless downtrends and the industry is in disruption here. So even if Workday says and blows you away on some of the stuff they say, it's a kind of stock that probably gets sold on the rip.
Couple other names here, just looking at the calendar and just from some sentiment that you've been sharing, you've been kind of intrigued, and I don't think you mentioned it here this morning. You kind of been thinking about like Axon a little bit, right?
I have a position in it right now, so I don't want to talk it. So I have I'm going to trade out of this position today. So I'm just going to not talk Axon. Pick a different one. There's like the odds of you picking that. I only have 22 positions on right now. So, and you picked actually one that I have. Well, I mean, I'm in earnings trades for pre-earnings rounds here too. So
we didn't plan that, folks.
What about Snowflake? Let's talk Snowflake for a second because this is one that's been very beat up here. So my thought process, and I want to be clear here, is I think we could have a relief pop ahead of the earnings and even into the earnings for some of these names. So I think there's two trades. One, maybe getting ahead of it, maybe actually buying some of these for a pre-earnings run, shorts, covering ahead of the report. That's very possible because a lot of people are short these names. They don't want to hold them through the report. And then, like maybe even into the report, some of these names, they pop up, some of these beaten down software names. And then you get out of your long and you maybe flip it to get short. I think that's the way I'm going to be approaching a lot of these software names into next week.
What about like just going off the cuff here? What about like a TJX? Just to go on the complete other side of the spectrum.
This is a stock that is like Walmart. This is a stock. So necessities: food, clothing, shelter. This is your clothing store of like brand names at discount prices. The off-price retailers.
Yep.
This is like where you want to be. So, I mean, I think any dip on TJX gets met with more happy buyers. This has been an unbelievable stock for a lot of time, and they're actually in the perfect situation here too. Right. Yeah, the valuation is not great. It's never been great, but on like Costco's and TJX, you don't get these things at 15 times earnings. They just don't happen. This is, because they're great businesses. They've been run well for a long time. But you look at this, at TJX, and it is trading at 34 times earnings, which is not cheap. But I mean, there's room for actually AI efficiency to come in here and help as well.
Totally.
So I think TJX is just in a good spot. So if it dips on earnings, I'd be a buyer.
All right, Triple D, I want to give a little
They want to talk tariffs.
They want to talk tariffs? Okay.
The Supreme Court could rule today on whether tariffs are illegal or not. And that is going to, I believe last time, can you look at PreMarket and just see quickly the odds here? Brettster's going to bring that up in the background here. So the Supreme Court could rule on tariffs today. They're saying it could come at 10 a.m. Again, we've known they could rule a lot of times and they've never ruled. Now, this time, people are thinking that it's going to maybe happen today. So it is important. It's going to be a major market mover. And I'm not even sure if they say it's illegal, what the reaction to that is. I'm not sure if the market goes up or down. So it's going to be one just to be aware. I don't know if the event is tradable ahead of it because, if they do rule against, well, what does that mean? The U.S. has to reimburse all these tariffs. What a mess that would be. They rule for, it means tariff man's going to start going crazy with more tariffs. So I don't know what's going to happen here with the reaction to it. But right now, the odds are justice rules in favor of Trump's tariffs are...
It says how many SCOTUS justices rule in favor of Trump's tariffs, and the odds are that 3 rule in favor.
So
33%. Yeah, that's the high. Yes, exactly. So this
the
is
odds are that they're going to rule against when they rule. The lower courts have already. This has been escalated here. Trump will come up with something else probably though as well to try to keep tariffs in because he's not going to go down not swinging. Trump is the biggest swinger of them all, so we know he's going to swing.
Keep that on your radar for 10 a.m. We don't know if there will be the ruling. The last 2 times, just as a reminder, the last 2 times, the Supreme Court right away came out and said, we're not going to rule on this today. So at least that was a nice gesture for people out there tracking that. We're going to wrap it.
Letting us know here too. State of the Union's on Tuesday. So
State of the Union, that's Tuesday evening.
Yeah, we know he's going to talk, a number of things. Obviously, tariffs going to be, that maybe the Iran situation, obviously going to be patting himself on the back a lot, which he likes to do. I would imagine healthcare providers could be a short into that. I've got that written down. And the reason is that I think he's going to talk about, the healthcare, obviously, costs and trying to bring those down. He put a cap there. I think we could see a little bit more of that. I'd be careful with pharmaceutical companies too. But we'll be able to talk about that next week.
All right, Triple D, let's switch over to STN Room, StockTraderNetwork.com. Folks, if you want to join us, we're going to go get ready for the open. We have a few more programs throughout the day today. Why don't you come check us out? If you haven't yet, PMPSTN is the code to get 10% discount on Stock Trader Network. We're going to jump over. We'll see you next week in YouTube for pre-market prep, folks. Have a good weekend.
Thanks, everyone.